Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Ryan Craver on the line. He's a retail expert and senior vice president of emerging brands and digital at Lamour Group. Ryan, how you doing this morning?
Doing fantastic. Good morning. Thanks for having me.
What a perfect time of earnings season to have you on.
Yes, the best time of the year or the quarter.
Okay, all right. Well, we got you here, and first, let's talk about the disaster stock of the day. Kohl's trading down here significantly in the pre-market. Looking at the numbers, I don't think I'd be selling this stock down $9, but obviously the street has a different opinion. First question, did you have any inkling of this coming on, and what should investors do now?
I think after seeing the retail sales numbers on how hard it has been the last couple of months for department stores, and also seeing the numbers that Macys put up, I'm not surprised that they didn't meet the comp number. With that said, I think that they are one of the strongest performing department stores we've got today. They're still in a growth phase. They are talking a lot about on the call that I was just on, a lot about personalization, driving trends of the business through things like athleisure. They're still opening stores, and they've got that nice little niche in between department stores and off-price with some pretty incredible values. So I'm a little surprised by how hard they're trading down. And I would think that this is probably a good opportunity to wait till they stabilize a bit and pick them up, because I still think they are one of the stronger performing department stores.
Okay, so you wouldn't jump in right here, but maybe let the dust settle for a few days. I was thinking that too. Dennis, mentioned some technical levels. Do you do it more time based, or do you pay any attention to the technical analysis and try and pick a level?
I'm more time based. I like to seek longer term trends. If you take a step back and you think about department stores in general, over the course of time they've continued to lose market share, and it's become a lot more apparent lately as we focus a bit more on the numbers and we see the big ticket items taking on. And so, if I look at the longer term picture, those national retailers that are department stores are the ones that will stand out. And I think Kohl's is still in that growth trajectory. They are still growing their loyalty base, and I think they're a longer term play. And I like them.
Okay, all right. What about J.C. Penney? Wow, what great news. They didn't lose as much money as they thought here. Burning through cash here. Street, they took it up here near the $9 level, back down here at $8.60. What's your take on J.C. Penney?
So J.C. Penney, I've actually picked them up a while back, mainly because they were battered so much. Comps were battered for so many consecutive quarters that, they were in a position where they had much lower comps and they had the option to buy quarters if they wanted. I think we're starting to see some improvements. I think, albeit on much lower expectations. I think they're still in that cleanup phase where they're continuing to figure out if they need to do any further store closures. I think they're realizing that they need to improve margins, and the only way in doing that is to shift to more private brand where the margins are a lot better. But there's still a ton of work to do. But I think the risk downside is a lot lower than the potential for upside. The margins are improving, but if you look back about 2-3 years, they're still a lot lower than where they were before. So a lot more work to do, but a lot less risk to the downside.
When you say you picked them up, is it something you personally invested in, or is it something that you, as far as, talking to clients and whatnot, when you said that you picked some up?
Personally invested.
Okay. All right. Macys, let's go back a little revisionist history here. Not a great quarter. What I'm trying to figure out is not the greatest quarter, but they're still in line for the year, basically, with their estimates. What did the street not like about that report in Macys?
Yeah, I think everyone was taken a bit aback just because of the number of reasons that came out in the call for why the miss. With that said, to your point, I was a little surprised that they maintained the full year guidance. In general, I think that Macy's needs a lot of time. They are focused on growing the business where everyone else is. They're talking about off-price. They opened 7 off-price stores this year through the name Backstage, so they're probably a little bit behind the 8 ball on that, but they're definitely trying to do it. They acquired Blue Mercury so that they've got a strong presence in specialty stores, cosmetics, health, and beauty. They're definitely putting a lot of effort behind the whole athleisure, wellness, lifestyle trend, and they're continuing to do the localization efforts where you've got product that's specific to that location. But I think they need some time. They're still in this phase where they have closed some of the stores and they're enriching the stores and improving. So I wouldn't count them out, but then again, I wouldn't be 100% rosy on them either.
Okay, all right. Going to this off-price theme here, and boy, I tell you, every time I pull up this chart of TJX, I'm like, why am I not in it? Why is all my money not in this stock? I mean, you look at the monthly chart here. Look at this thing. I mean, going just even since 2011 here. Why do you think that off-price retail is so hot? Ross Stores, TJX.
So the off-price, first and foremost, it provides the most compelling value or price proposition to the customer. Customers love going to the stores because they see the large national brands that they're familiar with every other retailer that they go to at significantly discounted prices. And, I mean, that is the overwhelming reason for why everyone loves them. With that said, someone may say, well, how do they do that? How do they provide so much lower prices? And it's really back to how they source the product that they put in their stores, how they find the product that they want to sell to the customer. When they come to wholesalers or other brands, they have a lot more flexibility in the way they buy. So they may not buy one big shot in spring. They may not buy just one big shot in fall. They may come to a wholesaler or to a brand and buy 20, 30 different times per year. And why that's so beautiful to wholesalers is because they oftentimes overmake something and they have extra runs or clearance and they need to figure out a way to get rid of that product. They'll significantly discount it. The off-price guys that are flexible enough to buy it, TJX, Ross, etc., will put it in the stores and be able to discount it significantly relative to what some of the other big box stores are doing, and it just keeps fueling the flywheel. That's why it's so compelling.
Is it like, are you getting last year's stuff? Is it something like that, or is it still the yearly stuff? I mean, it all looks the same to me, but are they buying the stuff that they're trying to clear out to get the the new samples in, or how does it work?
It's a little bit of both. You've definitely got some clearance stuff or last year's stuff, but if you think about the life cycle of apparel, it takes a full 6 to 8 months to design it, to produce it, and to ship it into stores. And take a particular brand, they may do an overrun, meaning they may only sell 100 units, but they may make 120 because they think that there may be some upside. They sell the 100 units, they've got 20 remaining. Those units then they may sell to a TJX or to a Ross once they know that they can't sell it to their core customer, and they'll sell it at a discount because it's so late in the season once they receive it. So there is some stuff that is clearance or older products, but there is a lot of stuff that is in the current season that they can buy and they can quickly get into stores because it's already landed here in the U.S. or Canada.
Maybe I should check that store out. 'Cause it seems like whenever I go to the department store, I go looking for shorts. Or like, oh, we're getting the winter stuff in, and when I go look for the winter stuff, oh, we're getting the summer stuff in. So I'm a little bit behind. Maybe that'll be a good place for me to go. Last time you were on, we talked about Amazon here. Good quarter. They just ran the stock up here to its all-time high. I've kind of pulled back now, not filling the gap though yet down to that under 400. What's your take on Amazon going forward?
Yeah, the last time we were on, I think I was incredibly bullish on them. They were well below 400. You're totally right. They've definitely gone a bit bonkers in terms of price. I wouldn't necessarily purchase here. I'd wait and see what ends up happening. With that said, they continue to grow, post some very, very strong gains. And like I said the last time, they make a lot more money when it's third parties selling on Amazon as opposed to them selling the goods themselves. And that shift is continuing to happen. I think as of the last quarter, over 45% of what they sold on Amazon.com was a third-party sold product, and that is incredibly lucrative for them. You couple that with the fact that they continue to grow through the cloud business, and they're creating probably the most forward and innovative cloud business, as well as it's the largest. And you got a recipe for further growth and success.
Yeah, I mean, I think there might be an Amazon package on my doorstep almost every day. My wife orders from there, dog food, just juice packs. I mean, she says, why go to the store? She ordered some printer cartridges. So, yeah, I have to agree. I mean, I'm active in it. Just don't tell her where the price is. She wanted to buy it when it was like at 300. Moving on here, Rob Hood, I want your thoughts on Place today. Had some earnings, not a lot of trading in the pre-market. Children's Place, you have a take on that issue?
So Children's Place has been rough. I mean, the juniors and the kids had been very, very rough. With that said, I think a lot of retailers are banking on a big back to school. Back to school is already starting to hit the store shelves in Children's Place and Kohl's and Macys, et cetera. I think a lot of it's going to determine what we see out of the May and the June sales as we start to see. Hopefully, a lot of that shifts back to the specialty like Children's Place. They're definitely positioned with a high store count. They've got greater than 1,000 stores, and they've got private label for probably 95% of the product that's in the stores. So a good back to school, and I think that they're gonna do quite well. A poor back to school, I think they'll continue to struggle.
Okay. Also coming out of the chat here, Sheldon McIntyre wants to know about Kate Spade. Spade and Company taking a haircut here, falling from the $35 level down to $28. What's your take on Kate?
So I think Kate traded well for quite some time because everyone thought that everyone was trading away from Coach and trading away from Michael Kors. With that said, that built some pretty high expectations. I think it's a strong brand. I think they're going to be as strong as they want to be the faster that they can get into every classification. So, everything beyond iPhone cases and handbags that they can get their name into, well beyond shoes, they'll grow. I think they still have legs. I think everyone's pretty tired with Coach, and they're definitely tired with Michael Kors because it is everywhere. So I think they've probably got some room to go. I'd wait and see when it stabilizes and then maybe get back in.
Okay. Also here, Rob Hood, another question. Lands End spun off from Sears Holdings. Do get some stuff from there as well. Really quiet here, consolidating at the $30 level. You think there might be any potential suitors for that company? Tough one, huh?
Yeah, it's a tough one. I remember the last time you put me on the spot about Radio Shack.
Oh, you can pass on that one. Hey, Ryan, you can pass. You can pass.
Let me take a pass on that one.
Okay, all right. Moving on here, we were talking e-commerce a little bit. Alibaba, you have any thoughts on that one after their good quarter?
Alibaba, I'm personally invested in. I'm a big believer in Alibaba. I think eventually they're going to figure out the U.S. and what they want to do. They've placed some bets in things like 11 Main, which is their own site. They've placed some bets in Zulily, which is a flash site. I think we're going to start to hear a lot more about them as they figure out exactly how they're going to play the U.S. In China, I mean, they are unbelievable. When I was there back in February, the placement of that brand is pretty much everywhere, and you can't fight a conglomerate of that size. I think that they're starting to see a bit of pressure from companies like JD.com, who is kind of being placed as the premier .com or e-tailer. But I think they're very, very strong, and I personally continue to hold them and think that they've got a rosy outlook.
Rosy outlook. Okay, that's pretty good. Pretty strong words for the issue. And coming from your background in education and opinion, I'm gonna write that down right now. Also, you cover the digital end, and holy smokes, I mean, the advertising. I mean, isn't that the key? Isn't that the key to everything? Twitter, boy, just took a haircut here. Still trying to find itself to make money. What's your thoughts on Twitter?
So Twitter, I'm a big fan of personally. I'm not invested in them today. I have been invested in them. I am still bullish on Twitter, mainly because I think it's been battered so much that either there's an activist shareholder, there's a management shakeup. We start to see some interesting engagement numbers from things like Periscope. I foresee limited downside, and I would assume that there's only upside in any further news. So much has been priced in, so many people are negative, but it's a platform that is amazing and doesn't rival any other platform that's currently out there.
Okay, I think I have to agree with that. Just any final thoughts that anything on your buy radar that you've been looking at? You seem to do your homework here. Anything that maybe's been beat up a little bit, market near all-time highs here. People are, trying to look for bargains. Is there anything you'd like to bring to our attention?
I'm still just a little flummoxed by where Facebook is. I'm a little surprised that it hasn't traded a bit better, given all the news that's coming out. Just recently, as of last night, they launched Facebook Instant, which allows quick access to articles from everyone from BuzzFeed to New York Times. I think that is incredibly impressive product. It's only going to get better, and it likely will drive engagement and traffic. So I'm a little surprised by that. And then on your Amazon comment, it's funny. Last night when I got back to my apartment here in New York City, I spoke to the United States Postal Service guy who was delivering all the packages, and he told me, as I looked at and counted the number of Amazon Prime boxes, he told me every building is greater than 70% Amazon packages.
Wow, what a great tip there. So we'll put that. Thank you very much, Ryan Craver, retail expert and senior vice president of emerging brands and digital Lamour Group, joining us on our show. Thank you very much. We'll talk to you again soon.
Thanks.